quarter which disappointed even on muted expectations, led by a big fall in the export markets. Amit Kalyani, Executive Director of Bharat Forge, joins us now to talk about that. Amit, hi, morning. We saw a big drop in the export market. What's your outlook for the second half of the year?
See, basically, this is a reflection of the extreme volatility and softness in the industrial sectors. As you know, we had grown our industrials business to about 40% of revenues, especially the high value sectors in which we had managed to grow our business have seen a lot of impact due to the commodity crash, and this is what has affected exports very substantially. But if you look at our exports are almost 640 crores for the quarter, which was 667 last quarter, and it was about 700 crores last year. So it's not substantially fallen, it's less than a 10% drop, but yes, it's not a positive growth obviously. It's something that we are very cognizant about, and we believe that we have a very good strategy in mitigating this. We have a lot of new products in the pipeline which we are developing using our own innovation and R&D. We have a good customer connect and traction, and we are ramping up our passenger car business, which is completely on track. And we are already starting to see, that in the next few quarters we will start this growth will start coming back again.
So, are you saying that your outlook for the export market is better now? What is your outlook, Amit?
See, the outlook is, right now it's very difficult to give an outlook because there's so much volatility. But I would only say this, that we will continue growing. I think the maximum softness in markets will be this quarter. I think from next quarter we believe that we will start growing again. And that's largely because once there is a drop in demand in any sector, there is a massive inventory correction that takes place, and which I believe is taking place right now.
Okay, so the maximum softness in the export market is expected in this quarter, that is in Q3. But Europe, continues to remain a very big concern. You saw a double-digit fall this quarter around. What's your outlook for the second half?
European market outlook is soft. Although we should see more or less, actually, while you say that, we have grown in Europe quarter 2 over quarter 1. We have a growth of about 6-7% in Europe, and I think next quarter also we will see growth in Europe.
Okay. But as we can see, European sales was down 16.5% exactly. I mean, it wasn't really a good quarter for you. Isn't that a concern?
Again, a large part of that impact is because of industrial. Because we had a lot of industrial exports to Europe as well. Now, as our passenger car and other businesses start ramping up, and our new commercial vehicle business that we won in Europe starts ramping up, we expect to see this getting reversed, and we should be back into positive territory.
Okay, so slowdown in industrial exports is what impacted the European business. But what is the outlook on the European heavy truck demand? Because in North America, we've seen a big slowdown. Has there been a concomitant slowdown in Europe as well?
Europe, look, Europe has a lot of issues right now. Right from the immigrant crisis to, countries whose economies are very fragile. The southern economies haven't recovered yet. So I think on the whole, Europe should see a flat to slightly soft market for next year. But again, as I mentioned, we've been working very closely with our customers, and we will outperform the underlying market.
Okay, Amit, let me get away from all these geographies. The results actually were a surprise to many analysts negatively. Do you think things can get worse from here on?
No, actually, I don't think that's right, because in our recent interaction with investors over the last 12 weeks or so, we have said that there are a lot of challenges, there is a lot of volatility. It's very obvious to everyone that the industrial economy, whether it depends on oil, whether it depends on coal, whether it depends on any of these commodities, there is no capex taking place. Capexes have been slashed to almost zero. If you look at some of our big customers, industrial customers which announced results in the last couple of weeks, they have all announced massive layoffs, massive cost reductions. And we are a company which, in spite of this, has managed to show a decent performance, and we are betting on our capability to grow our markets, grow our products to get back into growth. One more thing I will say is that yes, none of us are happy about the results. We are all used to high growth from Bharat Forge, and the one thing that I can say is we have a very strong management team, we have very strong technology capability, and every downturn we have come out of stronger with a broader product profile, with a deeper customer base, and this is no different. We have a huge order pipeline, we have a lot of products under development, and we are very confident that we will maintain our 2018 guidance and exceed that.
Okay, that's good to hear that you will maintain your 2018 guidance and perhaps exceed that as well. So can you just tell us, for the near term, what was the order intake in the quarter gone by and what's the order visibility like going ahead?
See, we don't have a business which has an order intake as such on a quarterly basis. Okay, our businesses are all tied up 3 to 5 years in advance, or they are 3 to 5 year order books, which get adjusted to reflect the demand at any given point in time.
Geography, do you see coming out first?
See, I will tell you that for us, we will see the maximum growth coming from North America and from India in the near future.
Okay, so maximum growth recovery expected from the North America region and from the India region. All right, Amit, we leave it at that. Thanks so much for joining us. That's the word coming in from Bharat Forge. So yes, things are slow at this point in time, but they do expect recovery in the North America and the India region soon. But let's talk about